welcome back. This is Lagos Accounting Academy. You recall that we are still looking at preparing income statement based on absorption costing principles. So the example we have here says in a period 20,000 units of a product called Z were produced and sold. Costs and revenues were as follows. We have sales totaling 200,000. We have product costs, variable costs 40,000, fixed costs 20,000, then admin selling overhead fixed 25,000. So we are now required to prepare income statement based on absorption costing principles. So remember, the main difference between absorption costing and marginal costing is that in absorption costing, we take all the costs of production in the income statement together without distinguishing between variable costs and fixed costs. So that is the main difference between absorption costing and marginal costing. So we start our statement now. First, we put up the heading. The heading is Product Z Income Statement prepared based on absorption costing principles. Now, we put down our sales. Sales figure there is 200,000. Then, less production cost, which is production cost of sales. Remember, variable cost from the question is 40,000 and fixed is 20,000. So total cost of production there amount to 60,000. Remember, this is absorption costing principle, so we don't make a distinction between variable and fixed. So we are taking total cost of production, and that is 60,000. If we remove the 60,000 from 200,000, we now have gross profit for product Z during the period to be 140,000. Now, to get our net income, we now have to remove admin, selling, and other overhead expenses in the question, given as 25,000. So when we remove that, we now have a net income of 115,000. Well, in this example, you discover that the net income we had in calculations in the marginal costing principles is also the same net income we have in the absorption costing principles. You ask, then, what's the essence? Well, they are the same here because we do not have any opening or closing stock. Under the marginal costing principles, we value stock based on marginal cost only, that is variable cost only. Whereas in the absorption costing, we value stock based on total cost of production. So if there had been opening and closing stocks, you would have seen that there might have been some difference between the two income statements. In our next video, we're going to look at another example of marginal costing principle applied in preparing income statement where there is to closing stock. Bye for now. Remember to like our videos. This is Lagos Accounting Academy, and remember to follow our channel